These are the various types of consumers, and we get into who they are, why they buy, how they buy, when they buy, what has to happen to get them to become your customer instead of your competition's customer. Now we keep on going through trends in business. Now remember, I said this was one of the least important sections, but do you get it that it's unimportant? Of course it's not. Every section in here is important. But the point I'm trying to make is do not underestimate the power of these. Get into these sections. Get to understand them. Get to know them. Use some of the links that we embedded in these areas here to go out and pull through the internet additional information and additional resources that can be used to accomplish your objectives. Now we get into the stuff in our program that there's a portion of our group that absolutely hates this stuff. Absolutely hates this stuff. Now remember, I talked to you about 4 personality styles. For those of you who have been through that section, you know there are 4. There's the analyst, there's the supporter, there's the promoter, and there's the controller. And there are 2 personality styles, which if you're one of these 2 personality styles, you hate this stuff. You see asset analysis and you go crazy. Okay, and that's supporters and promoters. Typically want nothing to do with analysis. They see this and they go crazy. Well, even if that's your personality style, and even if you feel, well, look, I don't know how to do the math here. I'm not comfortable getting in and analyzing the value of assets or understanding how assets are valued or priced. Or if you feel that, I understand. But when we wrote these sections, we wrote them so whether you're good at analysis or whether you're a neophyte, whether you have the personality style for it or you don't, we get into the basics in a basic communication model that will enable you, if not to become the expert, if you're a controller or if you're an analytical, you will get into the details, you will master the stuff, you will become an incredible expert at this. But even if you're not inclined for that, you have to have a comfort level with them, a familiarity with them. And so these sections will take you to the maximum of your personality style. If you're the supporter or the promoter, they will get you to that level of comfort as to what are assets, how do you value them, how do you maximize their impact on the company that you're trying to buy or build. So the point that I'm trying to get at here is get into this, get comfortable with it, set aside some time, pour that cup of coffee, get that glass of orange juice or whatever it is that you like to drink, and sit down and relax and make yourself comfortable. And then sit down and go through them paragraph by paragraph, sentence by sentence. If you don't understand it, go back and reread it. If it's totally confusing, set it down, relax for a few minutes, come back to it. But get comfortable with it, because what this will be teaching you is everything you need to know to understand when you're looking at a business, what goes into its value at the asset level. What are those assets? How are they valued? This is imperative if you're going to finance these assets, imperative if you're going to pay the right price for the company. And when you sell your business someday, it's imperative that you understand these values and what these assets are and how they work in order to get the maximum value for your company when you sell it. So it's an important part of the process. You may as well get used to it. And it's a matter of osmosis. If you're good at this, you won't have any problem with it. If you're one of those folks who struggle with it, you will get it through osmosis. Just read it. Try to understand it. And you know what? If you really can't get your arms around something, we have an advisor line. Call us. We'll help explain it to you. If there's something that's just no matter how many times you read it, doesn't make sense, it's okay. Give us a call. Join our webinars. Ask the questions when we get to the Q&A sections. Because guess what? Just like you might have a question on how do we evaluate an asset, or how do we deal with accounts receivable, what are they, how do we value them, you won't be the only one with that question. So we'll have lots of opportunities to address this stuff, but get into this section. Same thing is going to be true of the financial analysis. You know, I can't tell you how many people go into business and have no understanding of a financial statement. They look at it, they see assets, they see liabilities, they see stockholders' net worth. They see gross receipts on the income statements, they see expenses, and they look at the broader numbers. When their accountant prepares their statement, they look at profit and loss and net worth, then they throw the statement in the drawer for a year and never look at it again. It's an incredible waste. A financial statement is an incredible tool for understanding what's going on in your business, for being able to see what's working, what's not working, being able to see what it is that if you could adjust it or fix it would make a huge difference in the final outcome of your profitability of your business. All these things are massively important, and you can't go through your business career and not fully understand a financial statement. You can't, because you'll be making decisions that you're not qualified to make. There are going to be bankers who want to loan you money, and they're going to be looking at your statement, and if you don't know what's going to make a difference for them, then how do you adjust your company so that they're going to like what they see? You see, you can't do that. You've got to understand these things. Now, we know that not everybody on this call and not everybody in Bizar Financing is a mathematician. We understand that sometimes doing any form of statistical work or mathematical work is burdensome for you and unpleasant. So what we did here is we took it down to its basics, what it is you really need to know, and how it is that you can easily and quickly work with it so that you can be the best you can be at building and running your business. So again, another important section to really understand here, and don't just bypass it, because it's important. It's important, and it will serve you well once you get the basics of it down. Now, here is one of the more important sections of the program if you're going to be buying a business and if you're going to be building a business, because guess what? You're going to want to sell it someday. So even if you're starting a business from scratch and you're building it right from the ground up and you never have to go out and buy a company, this business price calculator is one of our tools that will serve you extraordinarily well. And I'm just going to start with somebody who never, ever, ever wants to buy a company. So why bother with this one? Well, let me tell you why. You're going to want to sell your company someday. You're going to want to get maximum value for it. You're going to want to be able to price it authoritatively to a buyer of your company so that they will pay you the most for it and pay you the best terms that you can justify in that purchase. And you are going to want to know you're getting a fair price for the business, and you're going to want to be able to show the buyer why they're getting a good value at the price that you're asking, at the price you want to be paid. And so knowing what creates value in a business, knowing what parts of the business are valued in what way, and how those elements come together to create the final price of that business is something that if you've never bought a business but it's time to sell, you have to know what goes into that. Now, if you don't know what goes into the value of a business, then you're going to spend your whole business lifetime and career building a company that may have little value when you get to the end of the line because you didn't put the right elements in there as you were building it. But once you know and understand what creates that end value in the business, then as you're building it over the next 10, 15, 20, 30 years, you know what elements to make sure are there and visible so that when the time comes to sell, you're getting that maximum price for that company. So that is for the person who has no interest in buying. On the other hand, if you're going to make buying a business the way you get into business, or if you're going to make buying a business the way you expand your business by using financial leverage to very quickly and massively buy up competition, then you have to know this because you need the tools that enable you to very quickly price a company. We've had investment bankers tell us this is the most powerful tool that they've ever seen, the tool that this whole section describes, and we'll show you how to use, that tell us it's the most powerful tool they've ever seen because it gives them an authoritative way to demonstrate to any buyer or any seller why the values are within that business, how to take it out of the realm of an emotional price of the seller who wants the highest price possible for this wonderful business that he's created but really doesn't understand what creates value, or the buyer who wants to just pay the lowest price he can and really doesn't understand the elements of value that they're really getting. This takes people through 3 different pricing methods, and they all basically converge. They're not going to be that different from each other. One of which is developed by the Internal Revenue Service, which they use to this day to value privately held companies for estate tax purposes. Now, the reason that that's significant is it's authoritative. It's used by the agencies of our country who apply tax for estate tax purposes on businesses, and they have to be able to justify those values in court if they have to. So they've come up with these formulas and methods because they cannot afford to be in court all the time. They have to have methods that stand the test of sanity, and they do. And we've reduced it all down to an automated formula for you where you'll be able to understand it, plug the numbers in, and now be able to sit down with any seller or any buyer and know exactly what those values are and be able to prove it to them that this is what it is and take it out of their emotional perspective. Very, very powerful tool. I wouldn't even for a minute try to buy a company that I didn't use this tool. And we show you not only what the tool is, we not only teach you how to use it, we also train you how to use it with the seller, how to use it with a buyer, how to use it with someone that you're trying to finance your company with. So it's all there for you. Very dynamic, powerful tool. And this one here is probably my favorite. This is the other tool that I would not even begin to attempt. I'm a reasonably sophisticated guy. Okay, I can look at businesses and tell you the ballpark what they're worth. I can look at businesses and wing it and tell you where the cash flow is going to come from to buy the business, because I've done this over and over and over again. So after a while, you get pretty good at it. But I, with as much experience as I have, wouldn't even dream of buying a company without using this tool to identify where every dollar of the financing is going to come from, to know which method of financing and funding this company for its purchase, for its growth, that I would use, without using this tool to identify the cash flow that I'm going to have in that business after the purchase, and how that business's assets are going to be financed, and how the cash flow of that business is going to fully amortize the debt that I've incurred when I purchased this company. Because when I've used this form, nothing falls between the cracks. Nothing. I've got every piece of that transaction nailed. So it helps me identify every single way that I can raise money right from the seller themselves. Every single way that I can raise money right out of the seller's business. All these different methods of how I can get my money out of the seller's business. Every way that I myself can come up with the money. Where do I have it hidden that I don't even realize I have it hidden? Where would businesses that I already own play a role in this, and how can they be a part of helping me raise the capital that I need to make that purchase? How can I raise money from outside investors and do it quickly and easily? How can I develop out partners as a source of my money and develop out ways of raising my financing through partners? How can I leverage even the brokers and the finders that I'm working with for a portion of the proceeds to build a business? How can I get government money into my company to support them? I mean, everybody knows you write checks to the government in business, but believe it or not, they'll write checks to you if you know where the money is and how to go get it. And so when I'm finished with this form, with this section, and the forms and the tools that it teaches me how to use, nothing falls between the cracks. Nothing falls between the cracks. And I end up with a surplus of money for the purchase of the company, not having to use any of my own. And again, I wouldn't attempt, as good as I am at doing this, do it all the time, I wouldn't attempt doing one without this tool to use. And I'm going to show you the tool in case you're not familiar with it before we finish out this section. Well, look at where we've come so far. We've talked about the foundation. Everything you need to do to make you the best you can be at this, to have the best understandings that you can have to be a dynamic builder of your business, a dynamic acquirer of companies. We've covered every aspect of that so far. We've gone through the things you have to know about and making sure that you have that knowledge. We've gone through the tools that it'll take you to help you calculate that, and that we've automated for you so that you don't have to be a financial wizard. You just have to read the directions, and then number by number you plug them in, you take them off a tax return, you take them off a financial statement, you plug numbers in, and our tools do all the work for you so you don't have to be a financial wizard. Okay, but then you get into the section of how to negotiate a deal that will close.